Last week's NFP didn't seem to have really weakened the S&P much. Maybe it's that the US jobs market is still growing, however, on a slower pace than expected. That being said, of course, we've seen the S&P rising over the past few weeks, not just the S&P, all the indices. They are being supported by the US-China trade war developments. On Wednesday coming, we have the US-China trade deal being signed off. The question now that I have put to myself is whether this move has been already priced in, and I am fearing that it's already priced in. However, that being said, we are expecting the corporate earnings reports to start tomorrow, with the banks going first, JP Morgan, Citi, and Wells Fargo, if not mistaken. If those come out good, then we should be expecting the equities to move higher. I'm a little concerned, however, on the S&P's performance and upside, despite the fact that on macros and also geopolitics, we're still looking still looking good. And that is because, not only because of the MACD and the RSI, of course, but also because volumes are really drying. They have dried out they're very, 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 very dry at the moment as we speak, right? That means to me that we might see prices start moving lower. We've had these it's been months and I've been talking about that potential pattern turning out to be an ending triangle with 3, then expected 4, and then 5 to the upside. Whatever the pattern turns out to be, in the short term, I am a little bearish, to be honest. We've reached the 61.8 extension of waves A and B, and also the 61.8 extension of the last impulsive move that connects waves 1, 2, 3, and 4. Okay, and we got to 32.50 or so with a false break above that level. Now, what I think we're really going to see is that tomorrow's first round of corporate earnings potentially triggering a downside move, right? That could, of course, not be the case. If that doesn't turn out to be the case, then most likely we're going to have this multi-month view I had invalidated and being wrong. That means that we are going most likely to see this as wave 1. This would be wave 2, then wave 3, 4, and 5. What this scenario indicates is that any correction would be limited to around 3,000, okay? And then we should see another move to the upside for wave 5. Now, if the first scenario is validated, that would seem to suggest that we're going to see a longer correction for wave 4, okay? Now, on the RSI, we had 3 bounces. On the MACD, we had 3 bounces. On the MACD, momentum is fourth bounce actually, is very near to breaking below this trend line. If that happens and then the RSI follows, then this is likely to be a move to the downside. We're looking at least 3,000 and potentially even lower. Okay. If we see wave A taken out, 29.68, this would become a corrective move again. Okay, so it would really validate this being an ending triangle. Now, of course, Tuesday is an important day, but Wednesday is a more important day for me, because if the US-China trade deal reflection in the markets suggests that this was already priced in, then we should be looking for other components to moving the indices around rather than US and China trade. Now, on the US index, prices moved exactly as we expected. We're seeing this as 1, 2, 3, 4, and 5. It's very, very early to say whether this is an impulsive move to the downside. I agree. Okay, we could have 1, 2, 3, 4, and 5. That's the A, B, and C. Okay, indeed, which means that this is going to be wave 1, then wave 2, 3, 4, and 5. I'm not disputing that. However, my indicators, the RSI and the MACD, show that there's going to be another move to the downside. Okay, we've had a double indication on the RSI okay, over here. And on the MACD as well, okay. Now, it seems like we might just move a little bit higher or not. I mean, it's not really, technical indicators don't show anything, but we could potentially take out the 70 on the RSI overbought level and then start moving to the downside. Now, this move to the upside looks indeed impulsive. That's why I believe this is a 1, 2, 3, 4, and 5, okay? And that will be wave A. Then we shall all C, B, and C near the 61.8 Fibonacci retracement of this last move and 98 to 38. As long as we remain below the 98.66, any upside move should be a good opportunity, could be a good opportunity for a sell, right? So up here, we could do that. Now, the question to ask is whether this level is going to last and how indicators are going to perform until then, because you could see B and C and then move to the downside, or this could be really a W, X, and Y that is going to end around the 97, 92 with a very short correction to the upside. And that means that we should see then prices moving with the first subject, the 95.80 or so.